last week with an outperform. So, Adrienne, what is the big problem here, and is it already in the stock?
So there's two big issues here. The first and foremost of which is the uncertainty of the China market. That is in the stock. So the street consensus is expecting China to be down again, down about 15%. Everything we're sharing after their quarter end is that China is improving. So this could be the quarter. This coming upcoming quarter could be the one where they inflect positively or approach flat. So that is in the stock. The second piece of it is, future demand, potential recession. Particularly in the North American market, where we're starting to see a lot of inventory in North America growing for about 40%, 38% faster than sales. Those are the two big ones.
Piral, why are you not as concerned about those issues?
Yeah, so we've had the opportunity to look at this with a fresh pair of eyes, and we're looking through some of the noise, right? As you've alluded to, some of the negativities already in the share price. The stock is down 40% year to date. It's on a PE multiple that's in line with this 10-year historical average. And as far as we're concerned, the fundamental reasons to own a stock like this haven't changed. If you're a medium to long-term investor, you're buying into an attractive sportswear industry that has, long-run fundamental growth support behind it. There are stock-specific drivers at Nike related to margin opportunity. It's obviously the sector bellwether, but also arguably the consumer discretionary bellwether. And yes, there's a lot of negativity out there in the short term, but if you're willing to take a slightly longer-term approach, then we're probably getting closer to points or levels where it's starting to look attractive.
Interestingly, you guys aren't that far apart on your price comparison, on your price targets. Adrienne, you're at 110 equal weight, and Piral, you're outperform at 125. So when would you step in, Adrienne, to buy this? When you've heard that the inventory problems are worked through, or are you longer term worried about demand here?
So I would say, and our price target is fiscal year end at the end of calendar next year. So it's really kind of a 15-month price target. I'd say we've kind of pressured the downside. We've done a downside analysis, case study on kind of what EPS could be. I think the over/under heading into this print for fiscal 23 ending May is probably about 350. The company can guide above 350. Street's at about 364 right now. There are some estimates that are kind of negative estimates that are sort of below that, around 330. But it's really the out year, right? The fiscal 24 year, that I think the over/under there is about $4 EPS. If we have constant pressure from uncertainty from the demand and promos coming back, which we are starting to see some of that in the North American market, and earnings can't go up, right? Stocks go up when earnings are consistently revised upwards. That's going to be a pressure point on the stock. So what we're looking for is an easing of that kind of inventory spread that I just mentioned. So if the inventory spread starts to contract, then they are moving through inventory and demand line is flatlining. And that's what we're looking for.
Piral, is Nike in worse shape than others on the inventory problem in North America?
So we cover Nike, Adidas, Puma in the sports brand sector. I would say, given its size and scale, obviously there is, in absolute volume terms, we have to take that into account. So there's clearly, a market level problem here. But I think that a lot of the concerns that relate to inventory are more focused on apparel and broad-based apparel, not just within sportswear. When we look at Nike's business, 60% or two-thirds of it almost is related to footwear. And footwear arguably has less competition. It has less brands in the space, so to speak. We understand and we recognize the concerns on the inventory side, and we're not saying footwear will be immune, but so far what we've seen is very much apparel related. And I would just like to also add, right, that one of the key debates, as my colleague rightly mentioned, is on China. China is certainly a negative sentiment driver for now. But Nike has clearly guided to what the headwinds for China are going to be. And by the end of the second fiscal quarter, that should be in better shape. Some of the indicators we look at do point to an improving backdrop in the China market. And actually, we take a slightly more positive view going into 23. Assuming that China recovers, then I think that can be a significant inflection point for the market and investors' view towards sporting goods stocks, which at the moment sentiment is very low.